hard is it, particularly with people working from home, the current sad environment in which many of those working for you in India and the US are currently fronted by? How hard is it to monitor your greenhouse gases, your emissions, when people are working from home rather than the new, beautifully eco-friendly buildings that you have?
The last few months have been very different. We've got a monitoring system which is working across all of our facilities, all of the equipment that we use, and then we have some estimates with what the individuals do from their home work environment. Of course, there's significant reduction because the commute has been reduced materially. There's also no travel, and we have a lot of travel, both domestic and international in our business. So we've made some estimates based on that, based on some real numbers, and actually it's significantly lower right now than is more typical for us in more steady state times.
That's a really interesting perspective, and how much, of course, the silver lining might be of this dreadful dark cloud of COVID is that the climate takes a breather. Of course, ESG is really the focus for many a company, not just the environment, but the social factors as well, particularly in the year 2020 as we confront an economic crisis, not just a health crisis, but also a social crisis. How much are you focusing on the S and the governance side of things as well, committed to your stakeholders? What are the new ways in which 2020 has made you think about this?
Well, one of the things we've done is in each of the three elements, as you shared, we've tried to set out ambition for 2030. For example, in social, we have a lot of work we do with communities locally. We operate in 40 different countries worldwide, and in each of those, we try to work with communities. Of course, in India, we have a massive program which was started years ago through the Infosys Foundation. We also have a similar program in the US. We work with high school teachers and middle school teachers to get them to learn how we can teach technical skills, digital skills in a broader ecosystem. We're working with community colleges in the US to bring in individuals and work for Infosys and reskilling and expanding the skill sets as they work with us. So there's many of those programs in social. There's also focus on diversity and inclusion, and we've set some targets for ourselves to further improve where we are. Those are the sorts of programs we're looking at within the social dimension.
I want to move into the reskilling conversation in a moment, but going back to the fact that you're in 40 countries, you have therefore one of the most perfect bird's eye perspectives of what's going on in terms of the world right now. I'm looking at numbers that are pretty horrific here in the US with the most case counts. More than 8.7 million people have had COVID. We've got 80,000 cases a day. Over in India, it's the number 2 worst affected country with more than 40,000 cases being announced today. We see lockdowns across Europe. It was but a week or so ago in your last earnings statement that you said you have extreme strength in the business. You sounded optimistic, people coming back to work. Do these lockdowns worry you?
Well, I think the way we see it in that regard is really over the course of what's gone on with the medical crisis, we've seen many governments put in extreme stimulus within their system, both policy and economic measures. And that has really helped many large enterprises to recover more rapidly than one would have imagined. And so from that perspective, where we saw business in April, when we'd given the guidance for a year, April to March, we expanded or increased that guidance because the way we saw that each month, we were seeing small improvements in many businesses. Now, having seen what is going on in the last few days, we know that those sorts of numbers will have some impact. And we know that the way we've looked at our business is taken into account some scenarios of a second wave. We've obviously not considered extreme scenarios at this time. But we'll have to see how this plays out. What we've also noticed is in many geographies, businesses have learned to work with some of this medical crisis. I'm not saying it's going to be possible with extreme sets of numbers, but there are things that are going on. People are using therapeutics, people are using masking, and there are ways people are finding to work and revive the economy, even on a personal level. So we'll wait and watch how this plays out. As of now, we've sort of factored in some scenarios, but not extreme scenarios.
Do you think you will have to factor in extreme scenarios and what you're seeing right now?
At this stage, we don't see that based on what we've seen so far. Of course, the numbers are increasing, and there's no question to it. But equally, there's a lot of medical knowledge that exists. I was in a discussion with a European client recently, and they were sharing with us how in different parts of Europe where there are more measures of constraining activity, there's also measures which support them medically. So we have to wait and watch how that plays out. At this stage, we don't think it's going to impact in a negative way from where we've guided.
Talking of European clients, talking of European companies you work alongside, I mean, earlier this week we had the dreadful numbers coming out of SAP, of course, a key software provider in Germany, which was saying, look, actually the lockdowns are going to impact their business. They are seeing client reticence to uplift their focus on technology to invest. But really what's happened with COVID is the work from home focus has strained technology and has been sort of a force for acceleration in terms of that investment. What do you see? Do you see the SAP side of the equation? Do you see in clients putting things off as the economy turns darker? Or do you think that there is commitment to this acceleration?
So there, what we are seeing, Caroline, is what large enterprises are going through big digital transformation programs and a rapid move to the cloud. And here we've built a tremendous engine within Infosys, which is our digital business. So in the last quarter, our digital business grew 25% year on year, and it's about just under half, 47% of our company. So what that really means for us is partnerships that we have with cloud providers, where companies are going onto the cloud infrastructure. Those are the sorts of areas where we see more traction, and we are participating in those areas, and that's the benefit of the growth we are seeing. To be clear, our growth guidance is 2% to 3% for the full year. We're not talking about returning to where we were before the medical crisis, where last year we grew at 9.8%, but it's certainly better than what our guidance was before the end of the quarter, at which stage it was 0 to 2%. So we see a gradual expansion in the guidance, more because we see the activity on the cloud and the digital transformation.
Do you think you will get back to 9% growth anytime soon with the economy, the global economy as it stands?
So the way we see that is we have our view for this financial year, which is through March of 2021, and that's the guidance we've given. My sense is, given the momentum we had getting into the crisis, we think as we come out of the crisis, we'll have equal or more momentum, because there's more imperative on large enterprises to push ahead, accelerate with their digital journey. And the more we are able to participate and partner with them, the more likely we are to regain that sort of momentum.
You talked about, of course, the focus on reskilling, and I know that your business has created, you said already, 13,000 jobs here in the US. You're looking to reskill another or hire another 12,000. How fierce is the competition for technological talent in the workforce here in the US, which is more than 60% of your revenue? Is it eating into margins? Are people getting more expensive? Does it worry you?
So the US, as you shared first, is 60% of our revenue. So the biggest market for us. We have a huge commitment. The numbers you shared, 13,000 recruited, 12,000 announced, a total of 25,000. We're recruiting from colleges, and we're also recruiting across what's called the lateral market, people joining at different levels. It's extremely competitive, the US market, especially for technology talent. But the approach we've taken is we're also taking individuals who have skills in technology, but on more older technologies, and then reskilling them or helping them reskill themselves onto the newer technologies. So we have programs within our reskilling curriculum where someone could be a COBOL programmer and could become a cloud specialist over a period of 6 weeks to 3 months by leveraging these sorts of tools. So that allows us to expand the addressable base of the sorts of people that can join us. We also recruiting at community colleges, what I shared earlier, and that allows us a larger pool, and individuals come in and then learn newer skills, building on what they've learned already. So we think it's a competitive market, but we are quite confident that we can recruit, and given the success over the last 3 years, we feel more bullish about the US once we get through the immediate concerns.
One of those immediate concerns, of course, has been the impact of limitations on visas, on H-1B visas in particular. And this, of course, is why you've doubled down on hiring locally, because, well, it's harder. The backbone of your business was always to bring cheaper labor from abroad, largely India, and fly them into clients in the US. And that just doesn't work as a business model in the same way it used to. Will it ever work again, do you think? Or are you going to rip up the script? Are you going to look at a different type of operating model where maybe you offshore that sort of work rather than bringing it into the US?
So there, what we've been doing for the last several years, well before where things are today, last several years, building a different operating model as you were describing. We have a model today where we recruit people from colleges within the US, and then they work their way through different levels for the projects we do in the US. That helps us tremendously in being more resilient from a business model perspective as we go ahead. My sense is we're going to do that more and more. A vast majority of our people within the US are part of this model, and that's going to continue to expand. And that gives us some resilience as we move ahead. We're also doing this, of course, in other parts of the world, in the European markets, in Australia, where we have a very large business, and some of the other markets where we operate. And that's the approach we put in place. We call that more localization, or being more aligned to the local approach.
Is that because inherently all companies and all countries are having to look more local? Are we seeing a sort of unwinding of globalization? And is immigration harder in Australia? Is immigration harder? We see what's happening in the UK and EU and Brexit. Do you think that business model of being able to parachute a cheaper workforce into any country is sort of at an end now, or will it change?
Our thinking is, in most of these geographies, we started this approach over 3 years ago. We built digital centers. For example, in the US, we have 6 new digital centers in different states across the country. The thinking is a lot of the work that we're doing, and we're really a technology-focused company, digital-focused company, needs some level of local connects with these digital centers. And of course, we also have a lot of work and teams in India where we do work in India. So we have less and less need for the movement of people. Of course, we have some of that for connecting with clients and so on. But we want to build this sort of a different model which allows us proximity for the new digital work that we're driving. And that was one of the drivers as we put in place this new approach and the new operating model.
If the immigration restrictions ease, if we have a new administration here in the US, will you change that thinking?
In fact, what I was sharing earlier, Caroline, was our thinking sort of came up over 3 years ago, where many of these things were more designed for the digital era. We don't see ourselves shifting gears dramatically based on how some of these regulation changes happen. We've been fortunate that we've been able to service our client work, notwithstanding the regulation changes. And that's actually given us some benefit because clients are more looking at us to consolidate some of their work where they don't see so much uncertainty with us as opposed to with some of the other peers.
But dare I say 3 years ago was when the reality of the administrative change in the US perhaps was coming to bear, and it was becoming evident the changes that would come. Are you hoping H-1B visas become easier, or does that really not matter to you at all?
At this stage, our business model is really much more resilient. And for us, we are more prepared for multiple scenarios, whichever way this thing plays out. And we want to be more and more in that category, because from a client perspective, the more digital skills we have that we can offer them at the right time, the better we are in terms of working with them, as opposed to having more volatility with changes in regulation.
As we mentioned before, you just had your earnings. Annual revenue forecast raised, of course limited amid the current environment, but still was raised. You won record amounts of deals. Are you feeling optimistic right now, or are you feeling concerned?
Well, at this stage, I genuinely have a sense that we have something positive in front of us. There's a lot of work in the digital transformation area. There's a lot of work in cloud. There's more and more work on cost efficiency, and we are seeing benefits of consolidation through some of the success we've had in delivering in this crisis environment. Clients are starting to see that we are really resilient. So my sense overall is positive. We will, of course, have to wait and watch how some of these case numbers play out. But notwithstanding that, our outlook for this year is positive, and I'm personally optimistic looking ahead.
And optimistic for profits as well as revenues growing?
Exactly. So we increased our operating profit guidance as well. We're at 23 to 24% margin for this year. And we see those sorts of things staying with us for this year. Beyond the year, we've given some views where we think once travel comes back, because travel has been a big cost that's come out of this, that will, of course, come back to impact us. But the fundamental operating metrics will still remain strong.